What is forex? Now, the word forex comes from foreign exchange. The FOR is foreign and the EX is exchange. So forex is basically the short term for foreign exchange. Now, there are other sort of names you can call this financial market, and it's currency market, foreign exchange market, FX market for short, forex market, forex, FX. There's plenty of names to choose to what you want to call this type of market. But the forex market is the biggest financial market in the whole entire world. Now, it's much bigger than any financial market, whether it's the stocks or any type of market, right? Now, it has a daily turnover of $7.2 trillion. The forex market isn't worth $7.2 trillion. Okay? Understand. The daily turnover is $7.2 trillion. The forex market is worth over I think it's $256 quadrillion. Okay? It's just the daily turnover, there's $7.2 trillion, every single day in the market. Now, of course, it is a lot of money. So why not, grab your piece of the pie? Now, if you look at that amount, look how many zeros are there in that amount. That is a lot of zeros, right? So, like I said, it is the largest, financial market in the world. It is at least 10 to 15 times bigger than every single stock market in the world combined. Now, if you look at this graph of the, financial markets, the two comparing each other, look how big the forex market is compared to the stocks. Right. Now, for us, how does the forex market work? Basically, it involves, such as you and myself, right? We are called retail traders. We'll get into that a bit later on. However, it involves us either buying or selling. So you can buy or you can sell in the forex market. Okay, so what are we buying or selling? We are buying or selling, one currency's exchange for that of another. So I'll give you an example. Euro USD, the euro against the United States dollar. Now, on the platform, on the forex platform, right, it'll show the format of this EUR/USD. Okay, that's trading the euro exchange against the United States dollar exchange. Okay, at a mutual agreed rate. Now, we will get into this later on of how everything works, the different types of currency pairs you get, major, minor, exotic, all those kind of things. We'll discuss that later on. I'm just giving a quick, brief explanation of what it is. Now, this is one of the reasons why the forex market exists. Okay, it's not the only reason, but it's one of the main reasons. Okay, is to facilitate international trade. Now, before I explain what the to facilitate international trade is all about, a lot of people question, is forex going to end? Will forex ever end? The answer to that question is no. Okay, one of the reasons is because of to facilitate international trade. The forex market is a decentralized market. There is no owner, there is no CEO of the market. Okay, so to answer that question, if you ever have that question, you might know the forex market will never end. However, it may be banned in countries, certain countries, right? It may be illegal to trade in certain countries, for example, India. Now, I'm not sure if it's like this still, but yeah, it can be banned, but you can still trade. Now, here's the example of to facilitate international trade. Let's say there's a company in Australia and they manufacture cars, but when they manufacture cars they use Japanese parts. Now obviously they have to import these Japanese parts from Japan. Now the problem is they cannot take their Australian dollar, go to this Japanese company that they get their parts imported from, and be like, hey, here's my money, please can we have our parts? The Japanese, company will laugh at them and say, what are we supposed to do with your Australian dollar if, in our country we use Japanese yen? Sorry, we can't give you the parts, right? So in essence, this Australian company has to first convert their Australian dollar into Japanese yen. Once they convert it, then they can purchase the parts from Japan, and then that Japanese company can export now the parts to this Australian company, and then they can manufacture their cars. Okay, so it's international trade, company versus company. This is one of the main reasons why the forex market exists and why it will never end. Remember, we're always importing and exporting. So from country to country, we'll always have to, do the currency exchange. Now, as you can see, the Australian dollar, you convert it to Japanese yen. So like a pair like this on the forex market, it would be AED, against the JPY, Australian dollar against the Japanese yen. Okay. Alrighty. Now, please, you do not need a big account to trade. Okay, you don't need a lot of money to trade. Don't listen to these gurus, right? So in today's trading, you don't need a large capital, right? Back then, in the olden days, yes, you would need a lot of money. Okay, but we'll get into that, why and how it changed and everything. But you can have minimal capital. So okay, it also depends on your broker now. So some brokers, they offer platforms where you can deposit like $1 and you can place trades with $1. Not saying you should though. Remember, if you have a large account, okay, that gives you, enough money so that you can increase your lot size. Now your lot size, we'll get into that later as well. But your lot size is basically the amount you choose, okay, the volume that you enter the market in, you enter in that trading, right? So the bigger your lot size, the more money you can make quicker. Okay, so it's just people with large accounts have a bit of an advantage to those who don't have a large account, but it's not to say that the people with a small account, won't make it or won't make money or whatever. Okay, it's just going to take you longer because of risk management. You can't just put a big lot size when you have a small account, because you have a higher chance of blowing that account. So you can just compound that account and grow it until it's big enough to increase your lot size, and then eventually you will then make more money, and then your capital can grow. But brokers are giving chances to the smaller guys as well, those who don't have funds to deposit a large capital in their trading account. So yeah, you can trade literally small amounts, so you don't need a large capital. Another thing is, what's great about trading is you get something called a demo account. Okay, some people call it practice account. Now, what a demo account is, okay, so you get two accounts. You get a demo account and a real account. Now, your real account is obviously when you deposit your real hard-earned cash into your trading account and you place trades, with that account. A demo account, it is exactly the same market condition as a real account. So market condition, everything, it's the live markets. The only difference is your broker gives you fake money on a demo account. Okay, it's virtual money so that you can practice. So if you're a complete noob, a complete beginner at trading, you don't have to now, risk your capital to learn. You can open a demo account and then you can practice to see how everything operates with that demo account. If you lose the money, fine, it's fate. You can just create another account with more money. Up until the point, when you feel confident enough, when you're ready, when you know what you're doing, then you now move on to a real account, and then deposit then your capital, and then you trade it. Obviously, with a demo account, you don't make real money. It's just to practice. But we'll go into detail of demo account versus real account, and all of those type of things. Trading also, there's less time required. So for those that think that you have to sit in front of your computer the whole day with your eyes glued to the chart to trade, wrong. You don't need to. If you got the skill and the experience, then it can take you a couple of minutes to place trades, right? Just depending on your style. There's obviously plenty of factors that go with it, but the possibility of you trading, in a couple of minutes is there. So you don't have to sit in front of the computer like a normal 9 to 5 the whole day. All you have to do is analyze. That'll take, like I said, depending on your skill and the experience, it'll take like 15 minutes. You place the trade, you set your stop loss and your take profit. It's automatic levels. Okay, we'll get into those later on, and you can leave your trade. So even if you have a full-time job, you can still trade, right? If you at school, you can still trade after school or before school or during break or whatever. Okay, during tea time at work, during lunchtime at work. You get different sessions that we'll get into: American, European, Australasian. It's 24 hours, 5 days a week. We'll get into that. So yeah, it doesn't take a lot of time for you to place trades to earn money. Alrighty, now there's 3 things that you need to start trading. The first thing is education. Now, education is vital. If you get into the market without any knowledge of trading, you are then gambling, right? Obviously, in the beginning, when you're a beginner, you're obviously going to be gambling. That's fine. All right, but if you 2, 3, 4 years into trading and you don't know anything, you haven't done a course or research at least, then you're gambling. Education is vital. You need to know what you're doing. All right, second thing is a device. It can be a phone, a laptop, PC, tablet. I mean, even those advanced fridges that you get with the screen, you can go on TradingView and analyze on your fridge. Okay, don't do that though. Just giving an example. But I'd prefer analyzing on a laptop or a desktop, and then placing trades on my phone. However, some people aren't fortunate enough to have a laptop or a PC, or it might be broken or stolen or whatever the case might be. You can still place trades on your phone, right? If you keep on doing it, you'll get used to it. Okay, it's not as easy as a laptop or a PC, but you will get used to it. Same thing. Okay, just a smaller screen. And then the third thing is internet connection. Now, it doesn't matter if it's data, normal data, or Wi-Fi. You need a stable connection to trade. Otherwise, once you place that trade and you don't have a stable connection, then your trade won't be executed as quick as you need it to be. Okay, so let's say you place it at a certain price. If you have a bad stable internet connection, it might only open a price above or below. Okay, so you need a stable internet connection. So if you have all these three things, education, a device, and internet connection, you can literally trade anywhere in the entire world at any time. You can trade in bed, in another country. You can trade on the beach. You can trade in the toilet. You can trade in the bath. As long as you have those 3 things, okay, you can literally trade anywhere in the world. Now, the market is, like I said, open 24 hours, 5 days a week. Okay, the currency market is closed on the weekend. So the currency market is open from Monday to Friday, 24 hours. So even if you night shift and you want to trade 3 o'clock in the morning, you're more than welcome to trade 3 o'clock in the morning. If you want to trade 10 o'clock in the morning, go for it. 5 o'clock in the evening, sweet. 8 o'clock at night, go for it. It's just the weekend that is closed. So that excuse of, you don't have time to trade, you're working. Yes, I understand, your job might be difficult, you might come home tired, but you still have that opportunity, just an hour out of your day, after you bath and eat, whatever, you can still look at the charts. Okay, it takes you a couple of minutes, like I said, depending on your skill and your experience. Obviously, in the beginning, it won't be that easy, but once you practice on practice, it'll get easier and you'll learn to place trades quicker. So yeah, but that we'll discuss later on. Then the last thing that I want to explain in what is forex is Forex is, a market where $500 million can be executed in a matter of seconds without even shifting price that much. Let me hit an example for you guys. Right, this is the chart on tradingview.com. Don't worry, it might look confusing, but once you learn what everything is, it's completely easy to understand. This is the USD against the ZAR, so your United States dollar against the South African rand. So the current price for $1 is 15 rand 65 basically. Okay, I'll explain the digits later. Those are pips. So let's say now I want to get onto that sentence of $500 million can be executed in a matter of seconds without shifting price that much, right? What do I mean by that? Okay, I'm gonna get a line here, and I'm gonna put on 14 rand. There we go, 14 rand. I'm gonna just round it off exactly so I can be more precise for you guys. So 14 rand, as you can see. Then I'm going to put a line at 15 rand. Okay, 15 rand. Put this here, 15. All right. Okay, so for those South Africans out there, you know that, from 14 rand to 15 rand, that's a 1 rand move. That's not big at all. 1 rand is 1 rand, right? So this move here, so from this candle over here at 14 rand, it pushed to 15 rand, okay? 1 rand move. Now, we make our money in pips. So how much pips is this 1 rand move on USD ZAR? So if I take this pip calculator tool and I drag it from there to there, I'm going to put it exactly as well, just to keep it, more precise. So I'm going to put it 14 rand to 15. So it's exact. Right, cool. Right, there you go. So for USD ZAR, from 14.12345 to 15.12345, okay, that is a 1 rand move. 1 rand move. Okay. Now that 1 rand move equals 10,000 pips. As you can see, if you calculate it, 10,000 pips. Okay, so Brandon, yeah, we make money in pips, but how do you calculate how much you're making? Right. Now that depends on your lot size. Okay, I will explain lot sizes in further detail, but I'm just going to give a quick explanation of lot sizes. So you get 4 types of lot sizes, okay, but you get 3 main ones, right? I'm just going to do the 3 main ones for now. So you get micro lot size. This is lot sizes from 0.01 up until 0.09, okay? Then you get mini lot sizes. This is from 0.10 up until 0.99, and then you get standard lot sizes. This is from lot size 1.00 up until, like, you can even go to 1,000,000, okay? But those are for institutions. We'll get into that later. Okay, those are the 3 different types of lot sizes. So now each lot size, the bigger it is, the more money you can make or lose. So let's keep it with a 0.01. So let's say you use the micro lot size of 0.01. This is $10 per pip. So if you use a lot size of 0.01, the amount of pips you make, right, it's 10 cents per pip. Okay, we'll get into that. Let's say a 0.10. Okay, a mini lot size now. This is $1 per pip. Okay, and then let's say the 1. Standard lot size of 1, this is $10 per pip. Right. $10 per pip. Now, in saying this, let's say we bought USD ZAR at 14 Rand, okay? And price went, boom, shot up, and we closed at 15 Rand, that 1 Rand move. We made 10,000 pips. So how much did we make on this trade? Once again, it depends. So let's say we use micro lot size, okay, 0.01. That's 10 cents. Remember, we made 10,000 pips on this trade. So this is, let me just do this. So let's say you use the micro lot size, 0.01, okay? It's $10 times 10,000 pips equals $1,000. So if you use the smallest lot size on this trade and you bought at 14 Rand, the price went to 15 Rand, and you close your trade, you made 10,000 pips. If you use a 0.01 lot size, this is an average. Obviously, it might differ because of swap, spread, all of that. But round about $1,000 you'll make on that trade. If you use a 0.10, right, it's $1, whoops, $1 per pip, so you made 10,000 pips equals $10,000. So you made $10,000 on this 1 Rand move if you bought at 14 Rand and it went to 15 Rand and you closed the trade. And if you use the standard lot size of 1, smallest standard lot size, okay, this is $10 per pip. So you made 10,000 pips. That's $100,000. 1.5 million Rand on a 1 Rand move. One move. Exactly that. So this is how you make money or lose money in trading, okay? Obviously, you need to now have your strategy. You need to analyze and predict if it's going to go up or down. And then, you base your trade off of that. And then depending on your lot size, that's how you make your cash. Right, so that's what I mean by $500 million trades can be executed in a matter of seconds. It just takes you not even a second, milliseconds, to click a buy button or a sell button and your trade is placed. So $500 million can be executed in a matter of seconds, okay, without shifting price that much. I mean, a 1 Rand move can make you 1.5 million Rand, if not more, if not less, depending. Okay, if you look at any other market, see $500 million. If you place $500 million in any other market, see how price reacts. It reacts crazy. All right, that's basically what forex is.